The impact of deflation on the financial sector, falling asset prices and financial losses. Deflation, characterized by a general decline in prices for goods and services, can have profound impacts on the financial sector. While consumers might initially welcome lower prices, the ripple effects of deflation can lead to significant challenges for banks and other financial institutions. In this article, we explore how falling asset prices during deflationary periods can lead to substantial losses for the financial sector. Understanding deflation and its causes. Deflation occurs when the inflation rate falls below 0%, leading to a decrease in the general price level of goods and services. Several factors can cause deflation, including decreased consumer demand. Economic downturns or recessions can lead to reduced consumer spending, causing prices to drop. Increased productivity, technological advancements and increased efficiency can result in lower production costs and subsequently lower prices. Monetary policy. Tight monetary policy can reduce the money supply, leading to decreased spending and lower prices. Impact on asset prices. One of the most significant effects of deflation is the decline in asset prices. This includes real estate, stocks, and other financial assets. The falling prices can be attributed to reduced demand and negative economic expectations. As asset values drop, the financial health of banks and other financial institutions is put at risk. Consequences for banks and financial institutions. Loan defaults. Deflation increases the real value of debt, making it harder for borrowers to repay loans. This can lead to higher default rates, causing financial losses for banks. Decreased collateral value. Falling asset prices reduce the value of collateral held by banks. This diminishes the security of loans and can lead to further financial strain if borrowers default. Reduced profit margins. Lower interest rates, often accompanying deflationary periods, squeeze banks' profit margins. The reduced profitability can hinder banks' ability to lend and invest. Investment losses. Banks and financial institutions invest in various assets, including stocks and real estate. Deflation-induced declines in these asset prices can lead to substantial investment losses. Broader economic implications. The financial sector struggles during deflation can have broader economic implications. Reduced lending capacity and higher default rates can stifle economic growth, creating a vicious cycle of further deflation and economic contraction. FAQ. Question: how does deflation increase the real value of debt? A. Deflation increases the purchasing power of money, meaning that the amount owed in debt becomes more valuable over time. Borrowers need to repay loans with money that is worth more than when they initially borrowed it, making debt repayment more burdensome. Question: why do falling asset prices pose a risk to banks? A. Banks rely on the value of assets as collateral for loans. When asset prices fall, the collateral value decreases, increasing the risk of loan defaults. This reduction in collateral value can lead to significant financial losses for banks. Question: what role do central banks play in managing deflation? A. Central banks can combat deflation through various monetary policies, such as lowering interest rates and increasing the money supply. These measures aim to stimulate spending and investment, countering the effects of deflation. Question: can deflation lead to a banking crisis? A. Yes, prolonged deflation can lead to a banking crisis. Increased loan defaults, reduced collateral values, and lower profit margins can weaken banks' financial positions, potentially leading to a crisis if not managed effectively. Question: how can banks mitigate the risks associated with deflation? A. Banks can mitigate deflation risks by maintaining strong capital reserves, diversifying their asset portfolios, and closely monitoring credit risk. Additionally, prudent lending practices and effective risk management strategies are crucial. Conclusion: deflation poses significant challenges for the financial sector, particularly through the impact of falling asset prices. By understanding these dynamics, banks and financial institutions can better prepare and implement strategies to mitigate the risks associated with deflation, ensuring financial stability in uncertain economic times.